What's up, everyone? Welcome to the Moving to Florida show. We got your normal crew here today, and today we are talking about veterans. It is our salute to veterans.
Yeah.
Okay. Did you guys like that?
Yeah, that was really good. A salute to veterans. Sounds
well,
good.
you know, before we hit record here, Yaya, our resident mortgage loan expert here on the show, you were telling us that you recently read like the entire VA loan handbook. Is that what I heard?
Yeah, it was over the weekend, man. It's one of those dumb things that I'd say I'm going to do, and then I end up doing them and regretting them halfway. That
does not sound like light reading.
I'm telling you, it was not the most fun read. But you know what? It was very inspiring, though. I'll tell you that. It was.
How did it inspire you?
So I don't know what happened, but thank you all the amazing veterans for working with me. I've had the pleasure, man, this last month to somehow work with all our amazing veterans. And I think I said this before, they have a lot of great information to share, a lot of great lessons. And, you know, as I work with them, it was interesting because a lot of these people came to me from other lenders. So to me, that was a little odd because I'm like, okay, good for me, but it's not good for the client. You know, you're not having a great experience if you're changing lenders or agents in the middle of a transaction. And when my last transaction with my veteran borrower closed on Thursday, I was like, you know what? I need to really know inside out. I know pretty good, but I want to know inside out. And I made this dumb commitment to myself. And I said, you know what, man, I'm going to read the entire handbook. How bad could it be without looking at how many pages there were? To find out there were 616 long pages.
Wow.
And now, because you made a commitment to yourself, obviously, you know, when I went to page 350, I was like, you know what, there's nothing about originating over here. There's all underwriter guidelines, but I still had to read it. But what blew my mind, though, and what inspired me actually was that how amazing the system is. And what blew my mind was how come people don't know this? Because even I found out certain things and it was shocking to me. I'm like, wow, this is amazing, man. Like the government has actually taken steps to ensure that our veterans do have a way to find a home. And I could tell you hands down, it's probably one of the best programs you've seen. You could put no money out of pocket, like zero down. You have no PMI. You have subsidized interest rates. Gifts are accepted. There's no seasoning here. There's so many cool things you can do. Plus, one of the biggest things in a refi that I don't know if you guys know about, which is a interest rate reduction refinance loan. Have you seen what that is?
What is
specific to a VA? Or
Yep, exactly. It's only for veterans. So you could have a delinquent mortgage right now, but if refinancing would help you get out of delinquency, lower your rate and payment, you can qualify for that.
Oh,
dude, that's amazing, man. I mean, it's absolutely awesome, and they have flexibility. You know, you could do a renovation loan, you could do a regular loan, you could do multifamily, you could do a lot of stuff. And, you know, a lot of times I think people also think, well, what if I am stationed here now and I am deployed somewhere else, but I already used my VA loan benefit? What do I do? Your entitlement can come back. It regenerates. It's not like one and done. So like they've thought of everything. But what was interesting is, man, like, you know, having the pleasure to serve somebody who actually served you. Like a lot of us sit there, you know, we're doing our thing, we're having fun, relax, but it's the sacrifices a lot of these people made. You know, the things they did made it a safe country, made it a safe place for everybody. Everybody's happy and relaxed. So now having the ability to serve these folks and doing it right was a very big motivational factor for me personally. So yeah, man, 600 pages, got them done.
There you go.
Well, let's back up a little bit and look at this from a very let's say a 10,000 foot view. What we're talking about here is the VA loan, the Veterans Administration, I assume that is, loan.
Veterans Affairs, U.S. Department of Veterans Affairs.
There we go. Thank you. I knew it didn't sound right whenever I said it. Thank you for that, Mo. So there is basically a special loan that's available for veterans, for those who've served in our military, in any branch of our military, right? That is not available to normal everyday U.S. citizens. And whereas if Mo or I wanted to go buy a house, we're looking at 3.5% down if we qualify for FHA loan, or
Sure.
5% down if we qualify, if we have to go conventional and we can qualify for that. For the veterans, it is zero down. Basically, 100% of your purchase price, as long as it appraises, is covered under the loan. Is that right?
Exactly.
Yeah. Okay.
It's
And
it's
4%
absolutely
in
awesome.
concessions too, right?
Yeah. Plus, the coolest thing with concessions, man, like the coolest thing I found was the people that are paying your concessions, whether it's the seller or anybody who's in the party of transaction, can even pay your debts off if you're
Yeah.
a veteran. They can pay off
Wow.
your debts. Like that's
So can-
huge.
Concessions. So
Yeah.
let's take this one step at a time. So concessions means basically, if it's a seller concession, it's a credit. It's a credit from the seller to the buyer. All loans are going to have a limit to how much the seller can credit to the buyer.
Correct.
For VA loans, what we're saying, that limit is 4% of the purchase price.
Yep.
True.
So
course.
so in theory, if the seller agreed and you're buying a $100,000 home, you could also have the seller pay $4,000 towards your closing cost, or of your debt paid off.
Your
Is that
debt,
what I heard?
yeah, exactly. You pay your
Your
credit cards
debt,
off. Now,
Bringing down interest rate, you can do a bunch of different things with it, right?
Now, here's the craziest thing. This is something that nobody else can do. So this is the craziest thing I found out. So if you're a veteran and you want to pay for your closing costs, you can get an unsecured loan or a secured loan and pay your closing costs. And I just have to count that in your debt to income, which is pretty
So
insane.
you can be part of DTI.
But think about this, man. Like, where can you do this? If I want to
Right.
buy a house, I
You
gotta.
borrowed funds, yeah.
I can get a gift, but the thing is, it's not. I can't go and apply for a loan and take that loan and pay my closing costs. It's not going to work.
Right.
So the thing is, it's what I find amazing is the flexibility, the leniency, but also the will to help. It's there's so many ways we can make this happen. So there's no way you could come and say, hey, man, I'm not going to make it happen. There's very few reasons as to why one would not qualify. Of course, obviously, if you're not eligible based on their rules and regulations, if you haven't been in the Army enough, or if you haven't, military enough, you don't have a certification of eligibility and all the things that are needed, obviously. But if you are, there's no better product I would go with.
All right. I'm going to quiz you here. What is that form called or certification called that the veterans need in order for them to get the VA loan?
That's a good question. So typically there's two things. You're either going to be retired and you're going to need a DD-214 for that. If you are active
Can
military.
you say that a little slower? What is
Sure.
the form that they need?
DD-214.
Perfect.
Now, if you are active military, you won't actually have that, but you would have something called LES, your leaves and earnings statement, that would contain the information. So one or the other would work for me to. And by the way, you don't have to get a certification of eligibility. We do that for you. Lenders do that. So all you got to do is just, let us know which are you currently active or you're not, and we can pull that for you.
Oh, so you can pull that for them. You can go into whatever portal you need to get into
Exactly.
to pull that. Perfect.
As long as I have a LES or their DD-214, I can definitely
Right.
get that. Convenient.
Awesome.
Let's talk about credit, because I know you said that basically anybody can qualify. Again, I'll reference before we hit record. I'm pretty sure you said you pretty much have to slap the president to be denied.
Yeah, I did say that. And the reason why I said that was because, so if you go to the actual VA lender handbook, now, you see, every lender is different, obviously, right? Lenders have their own overlays. Overlays are basically just investor rules on how they can sell the loan to a secondary market. And really quick I'm going to touch on that later just so people know what that means. But the VA says that they also work if you don't have a credit score. Now, a specific lender may not work with that, obviously. Based on their overlays, they may say we will take as low as 580, but the Veterans Affairs says you can have no credit score and we will still work on qualifying you. There's always a way. And when I meant slapping the president, what I meant was if you don't have the qualifications for a VA loan for whatever reason, you can actually go and approach them and they will try to help you.
You mean approach the Department of Veterans Affairs,
Exactly.
not the president?
Not the president. Not the president. I don't think that's going to be a long trip. up there.
Threatening probably wouldn't work.
Yeah,
either.
that would not
Gotcha,
work.
gotcha.
But kindly moving to the Veterans Affairs office would probably help. But the point being that with so much support, we as industry professionals have no reason to not jump in there and say, you know what, we're going to make this happen for you. And I think that was the switch for me, because I'm like, man, this is amazing. Like I have all the tools needed to service somebody, to like take care of someone, make it easy for them. And I know for a fact that they have a great product. I don't have to worry about product, because that's one of the things in lending we always look at. We want to make sure our absolute best that a borrower is getting the best possible product that gives them the lowest cost, gives them the most opportunity, helps them build the most wealth. But if you're a veteran, you have the best product. So I don't have to worry about that for you.
Right. Okay. So I have a question in regards to the credit piece. You said the Veterans Affairs is going to look to qualify you regardless of credit, but some individual lenders may have limits. Why do lenders have those limits that they would choose not to work with somebody that's under a certain credit score?
So it's not that the lender wouldn't work with somebody. So those are investors, right? So one thing people don't know, and most people realize after they buy a house, is that their mortgage is not held by the same person forever. So the mortgage market works in a cycle, and it's very interesting. So right now, today, you're applying for a mortgage and you get a loan. Now I gave you the loan. Now, once I gave you the loan, my job is to sell this loan to somebody else. I don't want to keep this hot potato. It's a risk. It's an interest rate risk, because as the market volatility changes, obviously my risk aversion, or how I feel with it, comes into play. So now I sold this mortgage to, let's say, a government agency. Like I sold it to Fannie Mae or Freddie Mac or somebody. I just sold it. They aggregate these loans and then they sell it to Wall Street. Now Wall Street takes these, makes a pool of a security, mortgage-backed security, which everybody knows what it is. They sell it now to other brokers, mutual funds, IRAs, 401ks. Guess who buys them? Fund managers. And guess who's funding these? The general public. So it's a pretty interesting circle. So this thing keeps on traveling. So now as a lender, when I'm choosing to work with, let's say, a specific client, and our investors say that we are only going to buy the mortgages from you as long as they sit within these guidelines. So now we have to work with those guidelines. Now, in that essence, every lender is different. So yes, you may have some lenders that may say, well, we'll go as low as 550, we'll go as low as 580, but based on the VA handbook,
right,
they can work with anyone who does not even have a credit score. And they can establish a line of credit based on compensating factors, like if you paid rent for 12 months consistently, paid electric bills, things like that. They can help you. But again, it's not every lender who's going to have that. Some lenders would have that. Now, the good news is most of us, it's a community for us. And I'm part of a group that's called the Veterans Mortgage Advisor. And we have a community of different lenders with different offices, different companies. And what our collective goal is to do our best for the borrower. So if my institution does not provide the product to help you qualify for this loan, but I have a friend in my community who can, I would gladly recommend you to go to them so you can move forward with your transaction, buy your house, right? And not be left behind, rather than sit there and just not know that it's possible for you to still get this done.
Right. Okay, that makes sense. I guess a follow-up question to that, and I'm kind of seeing how the pieces work. So these VA loans are still going to the same mortgage-backed security group as maybe the FHA loans and as the conventional loans. The Department of Veterans Affairs is just insuring that loan.
They're guaranteeing it, yeah. It's the VA loan guarantee.
Okay, very good. So that makes a lot more sense now. I knew I'd always heard VA, the Veterans Affairs, does not create the loans, but they insure them or guarantee them. So
it's I think it's very similar to the FHA format.
It is similar, yes. They guarantee
On that note, I know FHA has a mortgage insurance premium. How does VA compare to FHA in that?
I'm really happy you asked that, man, because that's another cool thing. There is no mortgage insurance on a VA loan. The only actual fee you have is a funding fee, which is based on how many times you've used your entitlement, how many times you've repeated it, if it's your first time. However, if you are a disabled veteran, I think there's a percentage, it's not in my head right now, but you can be waived from paying that. And in the recent turn of events, I'm sure you guys know what FHA has done with their mortgage insurance prices have come down. VA funding fees have also dropped a little bit. So to that essence, even though this is a little off topic, FHA loans are actually extremely competitive to conventional loans right now.
In some aspects, it's even better.
Yeah, it's insane, man, because you have the mortgage insurance premium used to be 0.85%. Now, if you're putting 3.5% down, it's 0.55. If you're putting a little more, let's say 5% down, it's only 0.5%. So that's that's like almost 40% in cost just slashed away.
Reduced, yeah.
Plus, FHA does give you better rates because it's subsidized by the government. It's a government program. So, and you could put as low as 3.5% down, regardless of what's your income. So, it's very interesting how that works. It's so cool that now it's like the tables have turned. It's like, okay, man, FHA loan all day.
So I know there's a little different terminology around mortgage insurance. In FHA, I think you have the MIP and the PMI. So mortgage insurance premium, and then it's escaping me.
Upfront mortgage insurance premium and private mortgage insurance.
So one's the upfront and the other's the mortgage insurance. And you have neither of those on the VA? So
you only have the funding fee.
Only the funding fee.
That's it. That's the only actual cost there.
Yeah. So in all reality, with an FHA loan or a conventional loan where you're going to have mortgage insurance, monthly mortgage insurance, someone with a VA loan can actually qualify for more because they don't have that additional cost in their monthly payments.
That's a very good thing you brought up. So that plus there's one more thing. There is two factors that go into play with a VA loan. So it's the debt to income ratio plus there is a residual income benefit that goes in. So long as the residual income is enough to cover, and it's based on per client, obviously, and then you have your debt to income ratio, which there are some leniencies. So if your credit is great, but your debt to income ratio is slightly high, but you have enough compensating factors on your residual income, it still may work. So what we're being told is work as hard as you can, do your best as you can to serve our veterans. Do not be lazy, is what I'm saying. So do your homework because there's so many cool things. Plus, this is one of those assumable loans. And the coolest thing is you can assume that as a civilian from a veteran as well. So if a veteran is selling their home, you can assume their loan. You don't have to be a veteran for that. Pretty sweet.
Oh.
But you do have to still qualify for the loan.
Absolutely.
Right. Okay.
And if anybody wants to know how that's done, you don't need to talk to a lender for that. You actually can just talk to the servicing company for that. Saves you stuff.
Interesting.
Yeah. Yeah, that's something people don't know. And they're like, hey, I want to assume a mortgage. I'm like, well, there's not much I could do. But the servicer who actually
we don't even
holds
think
the mortgage,
about that portion. Yeah.
Right.
That's one of those things
think
that assuming
exactly.
mortgages. Assume.
No, and the thing is, and guys, this is a really big thing, by the way, right now. Like, there is a lot of people who...
With those lower interest rates we've had years ago, yeah.
Yeah, there's people with like 2.5% rates. The only catch-22, though, is if somebody has a home that's valued at $400 and their mortgage balance is $250. Even though you're assuming that mortgage, and if it's an FHA or VA loan mortgage you're assuming, you cannot have a second mortgage. So your $100,000, $150,000, whatever the cost is.
That's your down payment effectively.
You got to bring that. So you got to keep these things in mind because, I love how a lot of influencers bring this up and like, oh yeah, assume a loan. Okay, but how do I do it? Talk to a servicer. It takes 2 seconds to tell me that. Okay, but now if I assume this loan, what happens to this money here? Well, you got to pay them. You know what I mean? It's not free money.
And you said you cannot have a second loan for that?
You cannot do a second government loan, obviously. And you're not going to be able to do a second conforming loan. And the other thing of the side is if you have a conforming loan, you cannot assume it. So.
Right. What about like a line of credit? Possibly. I guess it depends on the number, right?
It depends on the number, but something that I've seen really popular now is that I think about almost 36% homes in the U.S. are fully paid, and you can actually do seller financing, and that's gained popularity again now in the market.
I know seller financing. You got to talk the seller into that, though.
Yeah, you got to talk the seller into that. Yeah, exactly.
Okay.
All right.
What else did your interesting read over the weekend bring up that you didn't know before that reading?
So, I mean, it was pretty much, a lot of these things that were myths as well. Like a lot of times when you talk to somebody, you're like, hey, so have you worked the VA loan? Oh my God, it takes so long. No, it doesn't. It does not take that long. It's the same loan processing time. And there's so much automation now that unless I did not do my paperwork correctly, or you didn't do yours, or the client didn't provide what they were supposed to, that would cause a delay. There's not too much paperwork. In fact, it's a really cool product because, the addendum that is added in FHA and VA loans, it's like a built-in appraisal contingency sort of type of addendum. So it kind of protects you. Plus, they are very particular about the type of home. The home has to be safe. It's kind of like an FHA, appraisal. If the home is not safe,
Right.
it's not in a good position, it's not in a safe, I would say, structure, or in any way is dangerous, it's not going to get approved. They're not going to put a veteran in a bad house. So it's kind of like, I feel nice because the people I'm going to work with are all collectively taking care of the client. So it's a little bit less of a scare for me because I'm an OCD person. If, I'm putting a client out there, I want to make sure everything is nice and tight and it's neat and tidy, and the person I'm working with is doing the same thing. So this kind of leaves very little room for somebody to drop the ball. And honestly, it'd be kind of embarrassing, man. It's like, you dropped the ball on a veteran's loan, man. What's wrong with you? You know what I mean? Like, I'll be looking, I'm like in shame. I'm like, all right, yeah, I suck. Like, you know what I mean? I don't want to feel like that. So, and yes, there's one big thing people always say, appraisals take forever. They don't. They don't. But to that point, I've been seeing a trend of something called a Tidewater Act. You guys know what that is?
No clue.
I've heard of it, but I don't know what that act is.
So, a Tidewater Act basically is it's a rule that comes into play when a property does not come up to the value that it's listed at or the contracted price, and the appraiser tells you have 48 hours to provide them with comps that would justify the value that you're contracted on. And if within that time frame you don't provide them the comps or they disagree, they will issue the price, but they will not tell you what the price is. You can't know that, obviously, you're colluding at that point. But
Right.
once they have issued that value, as you guys know, notice of value will stick to that property for a couple of months.
Is it 60 days or 90 days that it sticks?
I
just
believe
like
it's
FHA,
90
right?
days now. Yeah, it's longer.
It's just like FHA.
Mm-hmm.
It's that's why a lot of sellers are apprehensive when they see FHA. Not so much VA, but it's the same rule that the appraisal sticks on the house for a few months, unless the next person that comes around.
It's a different loan type.
It's
Yeah,
a different
I mean,
loan type, yeah.
But to that, Mohit, since you brought that up, if I was a seller and I had a conventional VA and an FHA and I had to pick, I would pick a VA out of all three.
Oh yeah.
Hands down. Because there's a 95% chance that's going to get approved.
Well, it all depends on what my condition of my home is. You know what I mean?
No, I mean in terms of the due diligence and the work, because I've barely seen in my career, at least in people that I've talked to, a VA loan fall through. I have not seen those. I've seen people mess up with FHA loans. I've seen people mess up with conventional loans. Somebody made some mistake. Oh, nobody wants to talk about it. But with VA loans, I've not seen that many issues, which is very, very interesting when you kind of dive into that.
I know you said issues, there are not that many, but what are some of the issues? Besides obviously DTI and all that stuff, but what are some of the issues that you see happen? Few issues.
So I'll give you an example of today's market. So right now, this is a big deal, and this is a little bit of our fault as professionals too. We have to really know what we're doing. Right now, with the way the market is, every day you see the market swing different. And it's not a normal thing when a bond market moves 50 basis points, 80 basis points in a day, because that impacts rates consistently. So if you're looking to buy a home in a inflationary environment where you're not making as much money, you already have so much debt accumulated, now you're trying to buy a house and you have to now stretch your pre-approval to the max, right? You're like at the brink of extinction at this point. And you're like, man, I really want this house. I've made peace with my payment. I've made peace with the interest rate. I've made peace with whatever the hell is going on. I'm taking this. You go through the whole process, and somewhere along the line, somebody didn't communicate something right. And let's say the interest rate went up by 1/8%, or your taxes were misrepresented, or the cost of your HOA was wrong. And now this $20 puts you out of your ratios. If you're an FHA loan, there's nothing you can do. You can do a manual underwrite. That will create, I would say, a more difficult environment because you're going to have to provide more and more documents and conditions to prove to the investors that, okay, this is a good loan. Right. On conventional, same thing. On a VA loan, we can manually underwrite it in the same process, but it's a little less painful because they are a little bit more forgiving in those rules.
Okay.
And when the VA guarantee goes, it guarantees up to 25% to a certain amount. So it's kind of like the VA saying, I'm protecting you 25%. You know what I mean? So that's a pretty big promise right there.
Yep. All right. Anything else you want to add about VA?
I'm trying to
Justin,
think, man. I'm trying to scratch my brain because there's so much. But I don't want to.
Hey,
yeah, I don't want to overwhelm the listeners either. But one thing I would say, if any of you are, veterans, retired, thank you for your service. If you are currently in the military, I would highly, highly suggest, please do not disregard your benefits because there are different things you may qualify for and you may not know of. And if you are even curious, even if you spent a day in the military, just talking to somebody will not cause or pose you any issues. But if you could qualify for this loan, you could be on your way to building wealth and also owning your own home. And there's, including our amazing agents over here, I can clearly say it's a pleasure to work with veterans. We love you guys. So if you have any questions, even on this show, you can come up. We have our information. I'm sure Judson and Moth are going to put that in the chat. Please feel free to ask any questions you need. Find us on social media. Let us know if we could do anything to help you with any knowledge. It'll be our pleasure. We'd love to do that.
Yep, for sure.
There we go. Yeah. So you are a lender with PRMG Mortgage. So listeners, if you are a veteran or if you're active duty and you want to move to Florida and you want to be a homeowner, definitely reach out to Yaya. You can find him on Instagram at Yaya Chotani. We'll be sure to put his handle in the show notes so you can connect with him. With that, veterans, thank you so much for everything you do for us. And
Absolutely.
We'll let Mo wrap it up.
All right, now we want to hear from you guys. You can reach us on our Moving to Florida show hotline by dropping a voicemail or texting us at 407-900-5859 or drop us a DM on Facebook or Instagram at Moving to Florida Show. And for Twitter, our handle is at Moving to FL Show. If you'd like to connect with us, if you have any questions, or if you need a realtor in Florida, you can reach us at Moving to Florida Show at gmail.com. Be sure to subscribe to the show if you like our content so that it would automatically download to your device and get you one step closer to moving to Florida.